Good evening. You're watching Capital Market live on Channels Television. I'm Ladi Williams. Thank you for joining us. Let's look at what happened in the markets. We'll start with the European equities market, which closed higher across board on Friday, but sharply lower for the week as traders monitored issues such as global monetary policy, the Delta COVID variant, and China's tech crackdown. The German DAX was up 0.17% after a bigger than expected jump in producer prices, which saw a 1.9% increase month-on-month in July. France's CAC index rose by 0.31%, while the UK's FTSE 100 notched up by 0.27%. And over to Asia now. Markets in Asia-Pacific were mostly in the red. Shares fell on Friday as China left its benchmark lending rate unchanged. The Nikkei 225 in Japan fell 0.98% as Japanese automakers' shares continue to see losses. Mainland Chinese stocks also closed lower as the Shanghai Composite declined 1.1% to 3,427.33 points. While Hong Kong's Hang Seng Index plunged 1.84% to close at 24,849.72 points. Friday's losses leaving the index more than 20% lower from its mid-February high. Meanwhile, major U.S. stock averages rebounded on Friday but closed the week in red amid fears of the Federal Reserve pulling back its stimulus. The Dow was up 0.65%, S&P 500 added 0.81%, while by about 1.19%, with Nasdaq Composite moving up 0.7% lower. Fed officials are set to gather for their annual meeting next week. Market participants will be awaiting insights into the Fed's taper talks as many central bankers aim to move away from easy policy. And back home, the domestic stock market ended the second week of August in the red, down 0.1%, following a struggle between profit-taking and bargain hunting within the 5 trading sessions. The loss, which translates to about 20.45 billion naira, came amid sell pressure on 33 equities from 4 key sectors of equity listed on the NGX, particularly the consumer goods sector, which dipped by 6.31%. Performance on the activity chart of equities was also negative when compared to last week's trading, as a total of 866.54 million shares changed hands for 12.25 billion naira in over 17,200 deals against 1.61 billion shares worth 12.586 billion naira traded in over 18,600 transactions last week. However, market breadth for the week was positive, with 36 gainers led by Honeyflower and against 33 losers led by Mare, while trio of Honeywell, Transcorn Guarantee Trust Holdings Company were major contributors to total volume of shares transacted. And activities at the unlisted securities market also ended the week in the red as both the NASD OTC Security Index and market capitalization, the NSI, and the market closed with the decline of 1.25% and 1.25% respectively. Same time, NASD investors lose by 8.08 billion naira in value, which made the market capitalization to close at 639.77 billion naira this week. In contrast to 647.85 billion naira recorded on Friday, August 13th, as a result of negative movement in prices. There was a 23.67% decrease in the total value traded during the week as the market recorded a total of 201.72 billion naira against 264.29 billion naira recorded in the previous week. Let's cross over now to the fixed income markets. We're trading in the secondary bonds market closed the week on a bullish note as investors sought to fill lost bids from Wednesday's bond auction. Its average yield declined by 17 basis points to 11.4%, while the average yield declined short, mid, and long segments following demand for March 2024, 2027, and 2036 bonds, respectively. At the Treasury bills market, activities was mixed, with the yield edging upward at the close of the week. The average benchmark yields for T-bills rose by 0.33% to 4.69%. Meanwhile, average benchmark yields for OMO bills fell at the close of trading this week as it declined by 22.24% week on week to close the week at 5.95%. Our CBN special bill ended flat at 5.66%. The federal government raised 669 billion naira from the domestic capital market through issuance of Sukuk bonds between 2018 and 2020. Minister of Finance, Budget and National Planning, Dr. Zainab Ahmed, who made us know that an event organized by the Chartered Institute of Stockbrokers, as the proceeds of the bond was used to construct and rehabilitate more than 44 roads across the 6 geopolitical zones of the country. She also mentioned that the federal government would issue another Eurobond next month to help government finance the country's capital deficit. Well, joining us now to bear his mind on developments in the capital market is the president of the Chartered Institute of Stockbrokers, Mr. Olatunde Amolegbe. Great to have you on the program.
Thank you, Ladi. It's my pleasure.
Thank you so much for joining us. So, activities in the week were quite mixed. How would you describe the activities in the capital markets this week?
Well, the equities market seems to have capitulated to profit takers for this week, and so you saw on aggregate negative returns for this week. But as I always say, the week-on-week activities or month-on-month activities, either negative or positive, don't typically tell the whole story. You need to dig deeper, as the broad market might have shown a negative decline. You could see sectoral movers that are on the upswing. You could see particular companies haven't done much better than the entire market. I mean, as you reported, you saw Honeywell Flour doing well over 20% gain this week.
Yeah, quite a massive move there.
Yes, while the entire market seems to have come down, and that's what markets do, you know. So you have to dig deeper than the broad narrative sometimes to be able to see, where the market is headed. On the fixed income side, you will always see movements coming from the availability of liquidity and other macroeconomic indices affecting how yields move. So in a week like last week, where you saw the government coming into the market to raise bonds, you expect tightening to happen, because it's likely that rather than for people to head towards the secondary market to fill orders, then they will wait, and fill their orders during the auction. So as the liquidity tightens in the economy, yields are likely to start to rise again. So so those are what markets do. So and
right.
That's the situation. Really.
Anyway, talking about Honeywell and the good performance last year, what do you think drove investor sentiment towards that stock?
Well, investors are only looking out for new information. They are looking out for new publicly available information, and information they can gain from doing further analysis of those publicly available information. So if, for instance, Honeywell has come out with a relatively good performance in their half-year results, people are likely to read more into that and try to come to a conclusion as to the worth of the company. So, and obviously, they will also take a look at the industry that the company is also operating from. So, a company, for instance, that is able to pass on the effect of inflation to its consumers,
right,
will be expected to perform better than one that is not able to do that. A company with a product that is widely consumed and whose prices have limited elasticity will also gain, patronage from
fast-moving products. Yeah.
Absolutely. So this I guess is maybe one of the reasons why you will see more patronage from a company like Honeywell. So it's really all about the information that is out there. How analysts are able to what analysts are able to read into those information that will ultimately determine, what the patronage to the shares will be.
Right. So talking about the debt market now, what do you think should be put in place to encourage, companies to seek medium and long-term funds in that market?
Companies will have to take a decision as to, firstly, what do they see as the prospect of the company? If they think that the environment favors the product that is being produced by the company or the services being offered, then chances are that the board or the shareholders will determine that we need to expand our production. a decision, for instance, to increase production will mean additional capital will be needed. Now, what sort of capital do we need? Do we need long-term capital? Do we need short-term or medium-term capital? If the sort of capital we need to be able to expand production, for instance, is medium to long-term capital, then you also need to determine, is it risk capital we need or is it debt we need? All right. So if you need debt, obviously you head for the fixed income market. If it's risk capital you are looking at, then you will probably be consider the equities market. But I mean, again, the advisors of the company will now be able to tell them that, look, this is the best form of capital you need, and this is the best way by which you raise those capital. So if it is such that fixed income is the best form of capital, then that's where they will head right towards. So really, it is all about how the company it starts with how the company perceives the economy and the prospect of that company in the economy. If they feel that the prospect is bright, they will raise capital, and then what sort of capital will not be left to what they decide with the advisors, as the case may be.
Okay. But by what means can the government, access funds from the market? And can you explain the advantages to both the government and the market?
Okay. Of course, we've seen governments typically issuing bonds on a regular basis, either in form of FGN savings bonds to retail investors on the NSC, or in the form of the wholesale auction that they carry out on a monthly basis. So that is happening on a regular basis to fund all manners of either capital or recurrent expenditure. But we've also seen in the last 2-3 years where specific targeted financing is also being raised by government in the form of sukuks, in the form of green bonds and all. So I mean, the sukuks are targeted at specifically identified infrastructure. So the money is raised on the fixed income market and is used to finance those infrastructure. So those are the sort of financing means and ways by which the government can always come to raise funds from the capital market.
Okay, so next week is quite an eventful week. We have the IMF SDR,
yes,
and FAC allocation, T-bills, primary market auction. How do you see all this shaping investor sentiment next week and the impact on the market?
Well, the impact of a week that is going to witness so much activity like that is that you're likely to see more volatility in the market, especially the fixed income market. So for argument's sake, when the FAC hits the system, there will be more liquidity. So you are likely to see a situation where yields go up. But as the CBN, for instance, starts to issue treasury bills and other instruments, then liquidity is likely to tighten again as those liquidity finds their way into those various instruments. So you're likely to see more volatility than usual in a week like next week than what you've seen in the past. The SDR coming, the IMF SDR coming into the market, of course, will impact the foreign exchange market. Yeah. The foreign exchange market also have an impact on the fixed income market. So as that comes in, it also translates into price movements in that market.
Right. All right, Mr. Amaloga, we'll continue this conversation after the break. We still have a lot to chat on. Do stay with us. This is Capital Market Live on Channels Television. We'll be back in a moment. Welcome back. Still watching Capital Market Live on Channels Television. Now to other news from within the week. Nigeria's headline inflation dropped to 17.38% year-on-year in July from 17.75% in June, marking the fourth consecutive monthly decline. Latest data from the National Bureau of Statistics showed that food index also fell to 21.03% in July, while core inflation rose by 13.72% from 13.09% recorded in June. Same time, urban inflation rate declined to 18.01% in July from 18.35% recorded in June, while rural inflation rate decreased to 16.75%. All items inflation year-on-year was highest in Kogi, Bauchi, and Kaduna, while Akwa Ibom, Rivers, Delta, and Kwara states recorded the lowest increase last month. And the Nigerian Exchange Limited has listed 2 additional federal government August saving bonds on its platform. According to the NGX, the debt instruments listed include 204.965 units of 2-year saving bond worth 204.96 million naira and 603,248 units of 3-year bonds worth 603.24 million naira, both targeted at minimum subscription of 5,000 naira for retail investors. The savings bond offering for this month will mature in August 2023 and 2024, respectively. And the FGN bonds market held its traders anticipated the results of the FGN bond primary market auction from Debt Management Office this week. At the monthly bond auction, the DMO offered 150 billion naira worth of February 2028, March 2036, and 2050 with stop rates of 11.60%. 12.75% and 12.80%, respectively. Eventually, the DMO raised a total of around 260.09 billion naira, which is 173% of the total offered amount across the 3 tenors offered. The subscription stood at 360.02 billion, while 260.09 was allotted the auction, and it was oversubscribed by 140%. And the Securities and Exchange Commission says the capital market needs to be strengthened in order to achieve double-digit economic growth in Nigeria. According to the Director General of the SEC, Lamdo Yuguda, corporate organizations can access long-term funding through capital market to speed up domestic production and create more jobs. So Yuguda further adds that funds from the capital market can also be used to finance infrastructure projects in the country. Now to our next conversation. We still have Mr. Olatunde Amoregbe here, President at Chartered Institute of Stockbrokers. Thank you for staying with us.
Thank you.
So this week you had your national workshop at Chartered Institute of Stockbrokers with a theme, leveraging the financial markets to achieve double-digit economic growth for Nigeria. I'd like to know what were the key takeaways for you at that workshop?
Thank you. For me, the key takeaway is the fact that number one, the private sector and the public sector are engaged and focused on the need to grow the economy at a rate that is faster than where we are right now for various reasons. One of which is the fact that, the unemployment level in the country is simply unsustainable. All right? And if you couple that with population growth, you see a very difficult situation coming ahead. So the need to have a faster growth rate means that you have to do things, or put in place policies that encourages production, encourages exports, encourages more revenue to be generated in the economy, a more stable economy that gives investors confidence to want to expand growth, to expand their business and employ more people.
Right.
Now, to do that, it goes beyond just government spending. Yes, spending on infrastructure and the likes will help. But putting in place the right policy, the right economic policy, will also help to drive investors' confidence and help to, enable us see the sort of growth in manufacturing that will reduce unemployment, and put more people to work. And putting more people to work will also mean that the economy grow at a rate that is higher than the 2% or thereabout we've seen in the last few years. One of the discussants at the national workshop mentioned the fact that China was only able to take close to 800 million people out of poverty over a period of about 30 years because it was able to grow its economy at the rate of about 8% to 10%, on a year-by-year basis for that period. All right, and that way, it's able to, lift a lot of people out of poverty. So to be able to achieve such a situation in Nigeria, our growth rate needs to go to at least above 10% on a year-on-year basis for possibly the foreseeable future. Leaving it at the level it is simply not sustainable.
Okay, so help us paint a picture now of the relationship between the capital market and economic growth. What kind of relationship exists between the two?
Okay. The capital market is part of the financial markets, whose main function, by the way, is the channeling of capital in an efficient manner, allocation of capital in an efficient manner, meaning that we want to ensure that capital goes to those sectors that delivers the best productivity, the best bang for the buck, if you will. All right, that is the primary function of the financial markets. So in order for us to see the sort of growth we are looking for, the sort of growth we are talking about, the financial market has to be encouraged with the right policies, with the right incentives to do its work in an efficient manner. All right, and so it will drive economic growth by ensuring that capital goes to the best sectors, the least wasteful sectors, and those sectors that that best represent who we are as a people, and that best gives us the best return in terms of the sort of matrices, the sort of indices we are looking for in terms of economic growth. So that is what that is the nexus between the capital market, and economic growth.
Okay. All right. Looking at the three tiers of government now, how would you describe the patronage of these levels on the market?
I would say it's been improving. Okay. I would say it's been improving at least at the federal government level. All right. We've seen the state government also accessing capital from the market sporadically. It's gone down significantly, and now the local governments are totally they simply don't even have a presence at the moment. This didn't used to be the case. The truth is that earlier it used to be that all sectors of the government used to access capital from the capital market, and the truth is that all segments of government have needs. They need to provide infrastructure is not limited to only the federal government. All right, they need to build roads, they need to provide power, they need to provide a clean environment is not limited to the federal government. So what we would like to see is a return of all tiers of government to the market. You'll be surprised that an entity or a project like Sura Market, the popular Sura Market in Lagos, was delivered by the Etiosa local government via accessing capital from the capital market in the 80s.
Interesting.
So, and we have various governments that have good ideas, both at the local, state, and federal level, have good ideas of the sort of infrastructure they would like to deliver to their people, and we will encourage them to come to the market to access such capital. Okay,
can we see some kind of collaboration with fintech and the capital market moving forward?
With fintech, we really as a country do not have much of a choice. Interestingly, the component of our GDP in Nigeria, you'll be surprised that close to 50% of it is actually made up of ICT and such technology. All right, but we need to do much more in that sector, because the truth of the matter is that if you look at the millennials, if you look at our young people, our young population, that's where they reside. They reside in that environment, that fintech environment. A young man told me that, look, anything that he cannot do on his phone, then it's not worth doing.
Right.
All right. So what we are saying is that if that is where they are, that is where we need to go. Because that is where the future of the country lies. Yeah. That is where growth probably also lies. All right. So whatever needs to be done to ensure that we capture more of that economy needs to be encouraged by all.
Because I'm looking for a time where I could just go on my phone, pick a stock in a Nigerian exchange, and just buy, or sell.
Yes, I mean, and we are not even saying that should be limited to Nigerian stocks alone. We are saying any stocks anywhere in the world you want to buy, you should be able to do it on your phone.
Right.
And we are moving in that direction, I must say. You know, our regulators, our platforms are really actually pushing forward to take us there. We are nowhere near where we should be, but we are moving in that direction. You know, it's just that, you know, maybe there is a need for adjustment in some regulations that enables, you know, that encourages innovation, if you will. So a few things needs to be done to move us forward in that sector more than where we are at the moment.
Will we see a Bitcoin ETF at some point? Talking about cryptocurrencies.
It could very well happen. It could very well happen. It's just that, you know, again, I will say that the pace of this sort of products coming to the market will slow a little bit because, you know, of course, we want to be sure that our regulators also have a handle on things, because you don't want things to go out of hand. I mean, then people start losing their money, and you know, it makes a mess of things. So you know, you want to be sure that while you are moving with caution, so that people don't lose their money. So, but I have no doubt that we'll get there in good time.
I'll be expecting that. Mr. Olatunde Abolegbe, President, Chartered Institute of Stockbrokers, thank you so much for your time on Capital Markets.
It's my pleasure.
Great to have you.
It's a pleasure.
All right, that's the show for today. Thank you so much for watching. Be back next Saturday. Thank you so much. Bye.